Hi, my name is Joe Yarshin, and thank you for tuning in to Kick in the Rear podcast. The real estate investment review, the goal of this podcast is to review books related to real estate, business, and entrepreneurship to help you with your real estate journey. Hope you enjoyed today's episode. Welcome in to Kick in the Rear podcast, episode 32. My name is Joe Yarshin, and today on the podcast, we're going to be reviewing The ABCs of Real Estate Investing by Ken McElroy. So this book has the secrets of finding hidden profits most investors miss. I have reviewed Kenny's books before, and this is a Rich Dad Advisor book. So Robert Kiyosaki endorses and trusts Ken McElroy. He has a great podcast, both him and Robert Kiyosaki. So without further ado, let's get into it. Starting out in chapter 1, Ken goes into several myths about real estate investing. Myth number 1, you have to already be wealthy to invest in real estate. He explains why that is not true. Several of the books I've reviewed also go into the creative finance and the low and no money down options. He doubles down on that concept. He also talks about myth number 2, you need to start small, big deals. Are too risky. So you don't have to start small. You can do bigger projects, but he goes into some of the pitfalls of starting off too big or too small. Myth number 3, he says you can flip your way to success or get rich quick with no money down. So even though there are ways to do it with no and low money down, he talks about some of those pitfalls. He says myth number 4, some people just have the Midas touch. So there's lots of trial and error in successful investing deals, he states. And then myth 5, you need a great deal of confidence. I think you gain confidence by doing more and more deals and more projects. Myth 6, you want to do it, but you don't really have the time. I think that real estate's one of the few things you can do on the side or full-time. Myth 7, you have to know somebody to get going in the business. I think it helps if you have a mentor to get started, but I do a lot of my real estate investing journey on my own and reading books and reviewing podcasts and listening to other successful entrepreneurs. So myth 8, you have to be a seasoned negotiator and business person. Certainly that doesn't hurt. He says another myth is you have to know a lot about real estate. You just need enough to get dangerous. So he goes into several others, but Chapter 2 is saying you have to have a goal. So I underlined page 19. He talks about something called Strategic Coach when Dan Sullivan. I've reviewed Dan Sullivan's book before and used several of his resources. So I would recommend setting your goals and learning how to do strategic goal setting. He talks about making the goals SMART goals. So those are specific, measurable, agreed upon in writing, realistic, and time activated goals. This chapter is really good about discussing like your milestones and financial freedom, behavioral to-do lists, and business to-do lists, which he talks about finding your team, evaluating the market, finding great opportunities, and then valuing the properties, coming up with a budget and a plan and managing the property. So I took some other notes at the end of chapter 2. Current residents can turn into an investment property, rent it for positive income, setting up an LLC, buying 10 properties in the next 10 years can be financial freedom for a lot of people, or even 15 years if it's at a slower pace. So chapter 3 talks about having a team, and specifically the notes I took was, having an attorney and an accountant is important, but then having your real estate broker, property managers. So having an attorney, a lender, an accountant, appraiser, architect, potentially, depending on the project, insurance agents, property tax consultant, income tax consultant, estate planning, all these people you eventually are going to need. So the top 2 I circle were, an attorney and an accountant. I think those are very important people to have on your team. Moving on to chapter 4, to sum up, He says to become familiar with certain resources available online. So newspapers, business trade publications, government websites, and trade organizations. And then test your research ability, see how much information you can find about like your hometown. So it's a good exercise to go online and see if some of these resources you can find information about the market you're in. Chapter 5, to recap that, I highlighted a few pages. On 55, it talks about highways, highway extensions, master plan communities, universities, and university expansion as some areas you can look into: casinos, military bases, regional airports, company relos, major events. These are some things to look for in location. And then again, I highlighted on page 60, list every submarket or separate neighborhood you're interested in, describe the employment picture of the area, and then describe the unique persona of the submarket to drill it down farther. Chapter 6, he talks about several things the owner can talk about if you're talking to an owner for a direct to sale by owner. Action steps, he says you can target property parameters based on your initial review of properties in your targeted submarket. He says to find out everything you can about the properties in the submarket. Use your team to get specifics, create spreadsheets or a chart that compares and contrasts the rents, features, and amenities. And then find all the real estate associations in that area and join them to get more information. Let's see, chapter 7, I highlighted on page 82, in good deals, the numbers work, in bad deals, they don't. So it's simple math. To quote Kenny McElroy, he says that on his podcast all the time. It's a good deal is just simple math at times. He talks about the 5-step property evaluation, which is to, number 1, verify the property income. 2 is to verify the expenses. 3, determine the net operating income, the NOI. 4, find the cap rate and valuation. 5, calculate the loan payment and profit or cash on cash. I highlighted on page 85, I liked how he talked about actual income, actual potential income, and future potential income, the differences between those. He has some good charts on page 86, 87, and 89. So to sum up some of the expenses he talks about, he just shows how you can determine net operating income and how to find capitalization rate, which is net operating income divided by the purchase price. And then he talks about property value and offer price equals the net operating income divided by the cap rate. A lot of formulas in here that are good. And then cash on cash equals profit divided by down payment. So action steps, he says in this chapter: get on mailing lists, use numbers of the pro forma to calculate your offer price, begin making calls to property owners, and then perform a valuation process on actual property with actual data. Chapter 8 is the big commitment. He says, talks about letters of intent, purchase and sale agreements. So kind of goes through what all that is, different contingencies and offer letters and signing the agreement. And then his action steps in this chapter I thought were great. He has a website, kenmcelroy.com. He has sample letters of intent. You can do the same thing with purchase and sale agreements, and then continue to seek out property prospects, calculate valuation, see which deals and numbers work. Chapter 9 is all about due diligence. He has a due diligence checklist starting on page 114. File audit, internal inspections, government agency reviews, service agreement reviews. It's very detailed. Exterior inspections, books and records, etc. So he talks about on this page 120 different things you can do. Review your detailed due diligence checklist, use your team members to help with inspections, look for and keep notes, management plan opportunities to see where you can look for properties and analyze the books, categorize income and expense items as you discover them for the development of your operating budget, and then stay calm about problems that you find, be keenly aware and adhere to the critical dates in the contract. Chapter 10, putting it all together, making sense of it all. To summarize, he talks about, utilities and some other miscellaneous items from the previous chapter, but moving forward, action steps for this is visiting his website again. He has a ton of resources on there, he says, that are free, downloadable content. So chapter 11, follow through, leasing the property, increasing cash flow. He recommends reading Start Your Own Corporation by Garrett Sutton, which I've reviewed already. It's a great book. Rent collection, managing your budget, and talks about evictions, customer service, hiring property management, which we've talked about in previous books. So overall, I'd say this is a good book, probably 99 out of 100, 90 out of 100, A minus. Good book that Kenny reviews these concepts in his podcast all the time. So if you like today's podcast, please like, review, share. Otherwise, I will be releasing another podcast episode, hopefully shortly. Bippity boppity, investment property. Have a great day.